This podcast is for entertainment purposes only and does not provide investment, legal, or tax advice. Hosts and guests may hold positions in the assets, protocols, or companies discussed. Sam, welcome to the Signaling Theory podcast.
Great to be here, Rex. You're like one of my favorite people in this industry. And I'm always happy to come and chat with you.
Well, thank you, man. I feel like in a lot of ways we grew up together, especially like in our podcasting arc.
Mm-hmm. Yes.
Before we like really jump into it, can you just give a brief introduction of yourself and who you are, and just like give us the audience a foundation?
Yeah. So my name is Sam. I'm currently growth lead at USD.ai, and I've been working in this position since September. And it's really a great protocol, like project overall, that I love. Before that, I ran Leviathan News, also Flywheel DeFi, and so had been a long time, like you said, working in media and kind of in the industry. And it was, I had a lot that happened this past year, from some like family medical events to just like other things happening with my companies. And so it was a big transitionary year. And I think one of the things that has made it so great is that ending up where I am now at USD.ai, which I know we're going to get into later on, but it's really a breath of fresh air to be in a protocol which has like not just hype, but it seems like it's going to make a significant impact long term, and that's kind of like brought me out of my low state that I was in over the summer.
Well, man, I am sorry to hear about your low state, but I'm happy that you're out of it. And yeah, I mean, I think you kind of put us on a good path, right? But just to give some context, so I reached out to you. I know you've been working for USD.ai, and if you've been listening to this podcast, you've heard me bring up USD.ai like many times because, as I know you know, I think what you guys are doing is both interesting on the standpoint of like how to evolve stablecoins, but also on like, hey, how do we start to use this technology for things that are not just like introspective of crypto and actually like enable things in the real world. And so, of course, I want to get to that. I think many in the audience might just be interested in like everything from the basics of what is it, what are you guys doing, to where are you going, why is it, just regular project stuff. But when we were organizing this conversation, something that you said to me was like, one of the reasons that you're most excited about USD.ai doesn't even really have to do with the project, but has to do with, to put it crassly, right, like the vibes. And that what you've seen is a real rejection of a lot of the financial nihilism that seems to be pervasive. And I don't even want to say financial, right? Like, and I don't even want to say crypto nihilism. Like, look around, right? Like politics, like cost of living, all this stuff, right? It's super nihilistic. And so, like, that's where we should start the conversation. So, I'll give you the floor in case you just like have an idea you want to start us off with. If not, no problem. I'll ask a question. But just, can you talk a little bit about like the financial nihilism that you were experiencing and living in that drove you to find some change?
Well, can I ask you a question? You came in 2017, right?
I wish. I don't know. No, I came in like in 2020, except for I wasted 2020 on like Cardano and Tezos and things that, just everything that you lose money on to learn what's real.
Do you remember how you felt then?
Yeah, man. For me, the first time I was, Uniswap and Hayden Adams was like, oh my God, this is interesting. And then it was like the curve wars where I was like, okay, this is different. Like, this allows us to push the boundaries in a way that like something new and interesting and that has never been seen before might happen.
Yeah, it was more about like finding consensus and alignment and how can we direct these like distributed communities to working towards some like end telos, right? That they're at the end of it, like these are like fun games that we're creating, but at the end of it, we're going to have some greater good come out of it, right?
Yeah, for sure. I mean, just like to the curve wars, right? Like the idea turned into like a whole, like just shit show a little bit, but like it was, we have a DEX, like how can we build a better DEX that's more sustainable, that's more efficient? Like it was about building better solutions at the foundation of all of the like meminess on top of it.
Yeah, and I think that kind of sentiment that there's something positive ultimately that's going to come from all this development, I think we've almost lost the plot on that. Because I can think about going back to my entrance into the like working full time, which is back in 2017. I had known Bitcoin for a long time, but I really I believe that it would make a difference in the world, and I think that's what has kept me here for so long. Is that like all the time and effort and money and opportunities that have been chosen to like remain here for so long. It really like I have to believe at the end of the day that it's working towards something positive and good. And that's why like I see the current malaise. You said in the beginning that there's just nothing to argue about anymore. Like maybe that's a byproduct of the current malaise, but really we've almost descended into this broader nihilistic view of like what these markets are for and who's going to use them. And it's something that I really struggled with over the past year. Because like, look at it, we've built some really cool things. I think you talk about like the base infrastructure of like creating Uniswap, Curve, Aave, the plumbing that makes everything work. We've gotten to a point where it would be extremely difficult to make a product that's like 10 times better than what UniV3 or 4 or the current Curve designs or Aave, right? It's really hard to beat those incumbents because they've been iterating for several years now, and the market knows what works. We know how to set up token sales and raises, and we know how to direct liquidity. We know how to make swaps work. But I think we got to the point where it's like, okay, like we've kind of maximized all of these internal rails of lending and swapping derivatives with Hyperliquid that came out last year. What can we do next, right? And I think this is where the kind of massive opportunities are, because now you don't have to worry about, okay, how can I build a front end, or how can I get liquidity going for a token, or how can I deploy a stablecoin? These things are like trivial now. And so a lot of the hardest problems that we've needed to work through to just get to the point where we can build functioning apps that can compete with companies and groups, institutions in the wider world, we're just at that point now. And so I think it pushes the difficulty level higher because the questions that we have now are not like technological of like, can we build a hyper efficient AMM? Yes, we have those, or lending markets. The question now is like, can we find viable business models which can outcompete what's in TradFi or in the wider world due to the technical gifts that we've been able to develop through all of this like DeFi and other technology that we have now, even stablecoins, which is like just another rail, right? Can we now implement this to build great companies that make a difference?
Yeah, I mean, I love that sentiment, and I think that there are people like you and me included that still think like that. I don't, and I could say that like, sure, the same people that are today just like mask off, like it really is about extraction, and whether it's like a really cynical, like scammy level extraction to these things that are more dressed up that look more like investments, but at the end of the day, right, like, and I can name names as this conversation goes through, but like, Celestia is a great example, right, where there's a lot of interesting technology there, maybe, but at the end of the day, like, it's really hard to look at what happened and not see that as a VC scam, right, where that is, how does a VC create an asset that they can dump onto retail that that's the product, right? And so I don't know. I guess that stuff was happening in 2021, but that, at least in my experience, wasn't why we were here, right? And it feels like that's why we're here today. And, I think there's opportunities to be better than that. Like maybe some things are turning around, maybe they're not. But do you just have any thought on like how we got here?
Well, I think a lot of the path towards launching a token or some sort of a copycat has completely dried up. Like the market is very smart. We've got years of data now to justify valuations for different projects. And the pipeline, all the pipelines of like the academic who has an idea that they've been working on for 10 years and wants to try it out on crypto, and so they launch a token, that's gone. The builders who want to fork something and launch it on a new network, I mean, we've discounted that at this point. And a lot of the middle ground that was available for many years, right, where the easy gains were, where you could just throw money at the wall and it would stick somehow, have just evaporated. And so really now it comes down to like, can you identify fundamental value on one side, where you have like real companies, real projects, real protocols that are delivering value, or on the other side, it's all made up and there is no value, and it's just this like Keynesian beauty contest, determining like who's going to be the last buyer at the highest price.
But like, what do you think happened? Like, did we just like exhausted all the good ideas in 2022, and it happened to coincide with SBF just like completely screwing us all, and then there was just like nothing easy left, so all that was left is like chasing after our own tails? Or like this didn't feel like this in 2021.
I think a lot of it, I mean, but I would say a lot of the easy problems have been solved when it comes to like DeFi, at least. Like look what's left. You have restaking, which is quite possibly the most complicated thing I've ever heard of in my entire life. But it's not really, because there's an entire like ZK industry that exists, where the smartest people in the world are fervently trying to deliver privacy in some regard, but they're hamstrung by legal. And so like there's still a lot of hard questions to be solved. The issue though is like, how do you communicate that narrative in a very easy way? Have you seen this book that they gave out at ETH Denver, I think it was, about like how to explain ZK technology to a 5-year-old, or like Eli M5. I think like Zama or one of the other privacy focused networks were giving it away. And I've tried to read it to my kid, but it's my 6-year-old. It's very hard. It's even them trying to like break it down to something that is like very easy, still requires a lot of math. And so I think those concepts are hard to translate. And they're just not like normie coded concepts. And then the things that are like easy to understand are just exploited, and it's just a max extract machine. And I think the market's wised up on that as well too. Like meme coins are relatively dead as people move back towards like Polymarket and Kalshi. And
well, let's take a moment on meme coins. Like, why do you think that seemed like, I don't think you and I ever really thought that was legitimate, but like, why do you think it got the entirety of like the momentum and the energy of the entire crypto industry for 2024 and 2025?
Crime. I'm sure there's a lot of like wash trading that's occurring through there. It's very easy to, especially when you have $1 billion meme coin, to like move money into it by pushing the price up, and then somebody who already owns the tokens can sell out of it. Very, like, this is just my belief, but I think it's like illicit funds flows. And it was really like the first time where, because in order to make it work, it's almost like the meme coins work as an illicit funds flow in the same way that Tornado Cash does, is that the more buyers and sellers that you have, the more volume that you have, relative to the position that you need to exit, it masks the volume that you're doing, and you can hide the many different people who are like owning the token. And gives you like a more efficient way out.
Can I just give some evidence of that? Which is, do you remember the Bybit hack? It was around ETH Denver last year, so like February, March-ish. And one of the things the North Koreans did was they took a huge amount of capital, like hundreds of millions of dollars, transferred it over to Solana, and just yeeted it at like hundreds of different meme coins. And so like, who knows like which of the wallets that own those meme coins were part of North Korean, like the same people that just use that to launder the money. And, my first thought was like, oh my God, what if this is all volume on pump.fun? Like, what if this is the purpose of it, is to take illicit funds and like wash it through like, no man, I'm just like a lucky guy who like really understands memes and culture.
Yeah, those are for the ones that run. Like at the bottom level, it's just people trying to max extract, like the pump and dumps, and it's. But what's unfortunate is like how prevalent this type of culture has spread to the rest of the industry. I was shocked at the recent statements that Brian Armstrong and then I think one of the other Coinbase product employees made about Zora, which is Coinbase's kind of crown gem of the base ecosystem. Just saying that like creator coins are like 24-hour tokens. Like there's no expectations that they're going to hold value in the long term. They're just going to get pumped and dumped in this like really short period. And so that's the only thing that really matters is like how early you can buy them and then like whether you can sell before you get completely dumped on by like the people who are, like sniping them at the beginning, or I don't know. It seems like a terrible product to sell. Like there's no way that I could go to people who have not been in the industry for a long time and be like, go buy these things. You're going to lose money. You're going to lose like 90% of your money in the next day, but at least you're going to have like fun doing it.
How much do you think like this is a reflection of, we'll use FTX, right, as the inflection point, but like how much do you think this is a reflection of post FTX and then post like the just, wealth destruction of 2022, 2023 that was related to interest rates, but like also had other factors, just led the good faith actors who were really interested in building things to, like either quickly or slowly walk away from crypto and walked into things that kind of had more societal legitimacy and seeming upside, things like AI, and like private credit and the things that really popped off since FTX. And then like all that was remaining is the people that were here for just not the best reasons.
No, I think it's a longer problem than what you're talking about. Like you go back to the ICO boom and this type of production of worthless assets that were being used for illegality and pumping and dumping still existed then. I think what happened is that the means of production became hyper efficient, and it got to the point where anybody can launch anything for $1 essentially or less, right? And so anybody can start their own token, and it really back in 2018 or even 2020 to launch a token and to get significant size and draw attention and narrative and capital. Like you needed a white paper back in 2018. You needed partnership announcements. Like there was still like a guise of actually trying to make something back then. That started to fall off in 2020, and then by the time we got to Pump Fun, it was just like anybody can make a token, have at it. Like it's totally free market. I think that and look, I'm not discounting. Like there's people out there who like generally enjoy trading these things, and I'm not discounting any like their experiences or like what they want to do in the market. I'm not trying to moralize here. I'm just saying that like there's the voices that speak very loudly about those types of circles, and now increasingly being dragged in with the sports betting that takes place on like Polymarket and Kalshi. I just don't think it's healthy long term for the industry. And and Vitalik kind of sees this as well too. He posted about this the other day about how like Ethereum is not DeFi, like it's bigger than that, and it's not pump fund shitters. It's much bigger than that, which I wholeheartedly agree. I think there's like some like deep moral good that the development of the networks represents. I will say that this kind of flattening of the curve when it comes to the difference between meme gambling and sports gambling and investing in stocks is really detrimental overall. And it goes at I'm a boomer now, right? And so like I have kids and I think about like what their financial education would be. But if you're raising an entire generation of like young men to gamble their fortunes away, whether it be through meme coins or sports betting, or through 0-day options. Like it's not healthy, and it doesn't really lead towards like long-term like wealth building. Yeah. So I don't know. I don't think there's any fixes for it, and I don't think you can do anything at this point. I think the sports betting, you definitely could do something. Like I'm very against the explosion of sports betting through Polymarket and Kalshi.
Like I refuse to get into like a political debate on this show, right? But because like the only thing I've learned in the last 10 years is that like we're ants that don't matter and just get
Yes.
stepped on, right? So like whatever, right? It doesn't matter. I do think ultimately like any solution to rampant gambling comes through like politics, right? It has to come like from society saying like, yes, this is possible, but you know, it's the same with like drugs or like just straight up crime, right? Like it's all possible. We need to collectively decide like if this is something that we allow loosey goosey, like society is worse off for it, and we need to like come together to figure out ways to, one, reduce incentives, and two, like reduce the things that are pushing people into it.
I've fully I've fully recanted my pro marijuana stance in this stage and day. I think in my 20s, I was very for it. I was like, just let people do what they want. But then I get to now, and maybe it's just I'm getting old and I'm 40 now, is that I just don't think it should be legal in public places. You know, we ban smoking wholeheartedly in this country, yet, you know, when I walk around, there's just constant marijuana smoking in New York City, and it's one of the worst things that makes kind of overall life.
Okay, dude, I'll give us 2 minutes for this politics stuff, but do you feel the same way about alcohol?
No, because like I mean, but you can't drink. You can't drink in public in most places.
Is a bar not public?
No, but a bar is like inside, and it's a commercial venue. What I'm talking about is like typically anywhere you walk, and this is kind of like my belief about the gambling as well too. Sports gambling is like, I just don't think it should be so publicized. Like it should, like if you want to gamble, if you want to do these vice, like I just don't think that we should normalize vice. Is my point. And when it comes to either Polymarket or Pump Fun or smoking marijuana, I just don't think it should be like a public event that we celebrate and then we commercialize. Like the arguably the integration of sports betting into being one of the largest advertisers for all of the different sports has been terrible, right?
Yeah. Terrible for sports, terrible for people.
Yeah, like when it was like when it was something that you had to go to Vegas for, or like you knew a guy who would get you the bets, right? It's not open, it's not exposed, and it doesn't define the entire system, because like now people just talk about like betting lines, right? And it's, you know, like you have people in the stands who are like yelling at players because the props aren't being hit, or the players themselves are taking the dive. And this is like the thing that like Polymarket enables, is like if you become a big enough celebrity, you can essentially like push the market any way you want to, right? Like specifically, again, Brian Armstrong on the earnings call coming out and reading every single word that was in the Polymarket betting line.
Yeah.
Like it's this normalization of vice, which I think is very demoralizing and just overall like bad for society. And I hope that like I thing is like I don't think the Dems would have done anything differently had Gary Gensler been here. They just would have looked a blind eye, or maybe just, you know, shut things down entirely. I don't think that's the right path. But I do think that like there needs to be some limitations on like what can be done. And so
Well, dude, drafting off these limitations, right? I think you and I are 100% aligned on sports betting, like just any sort of, how do I phrase this? Like something that many in our industry point to and say, yeah, but this is good. Look at something that we've brought to the table that adds something new, is betting on political outcomes, right? And I'd love to get your take on that. Personally, my opinion is like, maybe there is some sort of way that putting money on political outcomes exposes some information that was hidden before by polling. Sure, like maybe. I just think that like gambling is bad and like this is horse shit. And like, dude, someone just made $400,000 on the Maduro thing. Like, what is good in that?
I think, look, I don't have an issue with like large scale political events. And I do think that having markets where you can speculate on those things is healthy and efficient. But like, I have issues with like vice like markets. So anything that death markets, which are like absolutely banned, right? And nobody has death markets because they would just enable assassinations. I don't like sports betting because like we know scientifically that the increase of sports betting leads to a decrease in the savings rate, more domestic violence. Just every bad outcome that you can think of is increased by more prominence of sports betting. So, and I look at the numbers and I just don't think that it's a healthy thing to pursue. I think it should still be legal. I just don't think that it should be public is my main thing. You shouldn't be able to advertise these things. You shouldn't be able to, integrate sports betting into the sports itself as advertisers.
But for example, right outside of sports betting, one of these stories that I was tracking was there's a Twitch guy, like his name's like Hassan something, whatever.
Hassan.
Yeah, Hassan. I was tracking this like kind of interesting thing where there was a market where the market was, is Hassan going to go to Zoran Mamdani's inauguration? And, like to the point I'm trying to make, I don't know if this was all theater or not, but he's like reading this on stream. Like, I didn't even know this was like, I'm not going to tell you guys if I'm going or not. Like, this is total bullshit. People are going to make money if I go or not. And like, there was like significant amounts of money placed on that. And like, I don't know if he was involved or not. I don't know if he made decisions on that, but like, why, what good is that? Like if you were going to make the argument that that's exposing some information that like traditional things like polling or whatever, like wouldn't expose, like why is that anything but extractive?
There's a fine line when it comes to these like more esoteric markets. If you actually look where all the volume's going on Kalshi and Poly Market, it's all in the sports gambling. Like 95% plus of all volumes on Kalshi are towards sports markets. On Poly Market, it's probably like close to 40%. There is a bit more diversity in Poly Market, but like overall prediction markets have just become the news places to bet on sports. And, elections only take place every, at fixed terms. And so it's really hard to get enough liquidity on these like more esoteric markets because like how do you hedge out on all this? The smaller the market is, the harder it becomes to hedge, and like the less incentives there are for market makers to come in and provide liquidity.
But I don't think gamblers are worried about hedging, right?
No, but somebody has to make the markets, right?
Yeah, I don't know. We might be getting a little too far off course here. I guess what I'd ask you is like, how much do you understand this conversation we having to be about crypto and something that crypto has enabled versus like this whole gambling thing is happening outside of our sphere, and like we have some Venn diagram area, but like this isn't a crypto, like Polymarket's not really a crypto story or crypto problem. Like if anything, all that is a story of like, hey, look, we can replace credit cards. Hey, look, we can replace ACH.
No, but I think like the ultimate point that I was making on all this is that like the narrative that we need to reclaim, right, and that we had for a long time, especially with Bitcoin, is like just buy and hold, right? Mm-hmm. Like HODL, like that was Bitcoin, and it still is Bitcoin's narrative. It's just buy and hold. And if you have leverage or if you have any sort of way to be liquidated, you probably will be liquidated, mm-hmm. like people were in 1010. And we've kind of like moved away from this very simple, just like buy and forget and come back in 30 years and you'll have a lot of money. And we've turned into this like you have 3 seconds to make 10% and then you're going to be wrecked, right? Mm-hmm. You lose all your money. I think we can move past that, and it just comes back to the ability of our industry to show like what can be done, right? We can, like I said, we already know that Aave is great. Like if you want to come in and invest in crypto, right? Like start with Bitcoin, but if you want to go down the curve, you have ETH, Solana as the L1s. But then when you get to DeFi, it's really easy. It's like Curve and Aave. I don't know if I can recommend anything else other than those two, because those ones make money, right? And like even though Curve's been like flat for years, like you do get a yield on it. So, and there's much more out there if you want to put investment time into. But like if I'm going to go recommend to my friends who don't actively work in the industry to buy something, I would be hard pressed. Even recommending Curve, probably just recommend.
I would
Aave.
definitely not recommend Curve. I would probably not recommend Aave either.
See, that's the thing is like there's nothing that you can say that is like, okay, this is a company that is going to be, or a protocol or a token, which is going to be worth billions, and you should put your money towards. And I think like this next year is where we break that. There's a lot of new either consumer apps or companies like mine, which are creating new asset types and facilitating new types of debt markets. That are using the rails that have been built over the past half decade and taking the knowledge that has gone into all the wins and losses, especially the losses, to design better products. Mm-hmm. I think that, what I think the thing that people figured out that coming into this year is that the margins on pretty much every single product in crypto were going to go to zero as TradFi comes in, because they're way smarter than any of us. And when they're doing due diligence or setting up any type of program, like they're not going to allow for these fees to be extracted. Like their whole job is to prevent extraction.
Or to capture extraction.
Yeah, or to capture extraction themselves. Yeah. And so like you look at the evolution of what's happened. I'm just going to talk about like DeFi things here, is that like, lending rates have compressed on stable. Well, sorry, I'll give them the lending next. But on swaps, like swap rates have come down to like what they're like 1 basis point now for stablecoin swaps. For volatile swaps, they're mostly at like 0.05, 5 basis points. And then lending itself, like there was this arbitrage where like people just weren't making any money at all on Aave for years. Like you could borrow USDC or USDT at like 1%. That's been closed, right? It's now 5%. And it matches the treasury rate. And I think people's just expectations have like matched what's out there in the wider financial world. And so now the question is like, okay, so we have these systems, they're pretty relative to what a bank can offer or what a private credit fund can offer. Like, what's the benefit here? Like, why would anyone want to come use these more difficult systems that have like shitty UX, like terrible, like no customer support? Like if your money's gone, you're gone. You're wiped out, totally wrecked. Like, why would people want to come use these in the first place? And so I think that's the kind of defining like positive moral good question that like we have to, and other founders have to figure out, because it's a very difficult one, right? It moves away from just like, okay, how can we mimic what's already been done on Wall Street and in the banks and in private credit, and how can we move towards creating something new and novel, and then growing that to thousands of times, and providing benefit back, right? Because like I think many of the projects that you talked about, hindsight's always 20/20, but Celestia sounded like a great idea in the moment, right? Eigenlayer sounded awesome when they were promoting it, and maybe they have great marketing teams. Maybe they were just always hungry for new ideas, but I think that over time the valuations reset, and we kind of have the hindsight to look back and say like, oh well, maybe Eigenlayer shouldn't have been valued at, what was it, like 50 billion or something, or like however much the valuations are, like these really silly things, and it comes back to earth, and that also coincides with vesting cliffs as well too. Yeah.
Well, here's like where I'm bullish for the future. We can still use the same primitives, the same models, the same technology that got us to where we are, right? Like in the EtherFi case, that's the staking. In the USD.ai case, that's stablecoins. like this stuff cannot just be like self-referential and masturbatory to the things that we've already built. Like we need to start using this technology as a tool to do things in the real world, right? And so for EtherFi, what that means is let's take our capital base and use that as a platform to start building like real services that touch like it's like literally a bank card, right? For USD.ai, and you can say this better, but it's like let's use stable coins to like fund something in the real world that's providing real value that's extrinsic to crypto. And like we can have a whole conversation about like is AI a bubble and what does that mean for GPUs and all this stuff, blah blah blah. Like that's a whole, like, it's totally irrelevant, right? But like what you're doing that's really cool is saying the product here is not crypto. Crypto is something that we're using to enable something that people actually want for things that are related to their businesses.
You know, I think the core question that we're solving at USD.ai is like, how can we outcompete banks and private credit on cost of capital? Like, can we offer lower interest rates with better deals than what they're offering? And I think the answer is yes, right? Because like, let me just, okay, we're going to switch to USD.ai. Like what we do at USD.ai is we're essentially like Aave, but for GPUs. You take a GPU, you tokenize it, you turn it into this NFT, and then you bring it to the protocol, and then you borrow stablecoins against it. Much like you would go to Aave with Bitcoin or ETH or any other type of asset, you deposit it in. The custody of the asset is transferred to the protocol in that sense, where like when you borrow against your ETH or BTC or whatever your collateral is inside of Aave, you no longer have control over it. It's yours if you're able to pay the loan back, but it's no longer in your custody. It's now in the custody of the protocol, which should act programmatically. And so it's the same thing for us. Like we're taking like everything that's a part of our ecosystem has already been done by everybody else, right? We have a 2-token model, which was pioneered by Frax and then really sent turbo by Athena, where you have a stable coin which doesn't receive any yield, and then there's a staked version which has some sort of lockup which does earn the yield, right? That's already been done many times. The whole idea of this like NFT borrowing or like collateralized lending, Aave really ran out the door with it. What had been done through USDI is previously in the company called MetaStreet, which Connor David founded. They had developed Oracle's NFT lending on way worse collateral, on like punks and literally valueless NFTs that lost 99% of the value. But they were able to structure the financing in a way where ultimately people made money on the financing, even with the value of the punks and all the other NFTs that they're supporting essentially going to zero. And so, like all those things really allowed it to like pick and choose what the best models were, to come and say like, okay, here we have an asset which is like the hottest asset in the entire world, right? It's trillions of dollars are going to be spent on GPUs and infrastructure build out in the next yearly, right? We're spending billions of dollars just on GPUs. NVIDIA has the highest market cap of any stock in the entire world. They have like $50 billion worth of, like $50 billion in, or maybe more, I think it's 500. I think it's $500 billion of like back order demand for their chips, right? And this is over the next like 5 years or so. It's just incredible how much demand they have. There's not enough money. It's sucking up all the money in the world as people like recalibrated and are just needing hundreds of billions of dollars to build data centers, which is having knock-on effects downstream of like pushing up energy prices or, putting strain on like water. I don't know. Like we'll figure it out. But the main thing is that like there's this massive demand for this one asset, and you have to ask the question of, okay, like how do we apply DeFi to this? Like what's the one thing that we can offer that other people can't? And really for us, it's like speed and this programmatic loan distribution. So, like I said, like we don't. The company that I work for is called Permian Labs. We're like a development company. All that we do is issue the token, issue the GPU, the server, because like an NVIDIA server is worth these like B300s. You know, they're worth something between like $30,000 to $50,000. All that we do is take that server, put it into an NFT and a legal wrapper, and then that NFT now represents the title to that server. And then you can take the NFT and then come to the protocol, deposit it in, and get back stables, right? Which, like on its face, doesn't sound that complicated, but there's a lot of technological work happening in the background. And the great thing about this is that for us to issue the NFT, we can do that for free, right? It doesn't cost us any money to issue the token to the server, right? And then more so, the person taking the loan doesn't have to pay anything except for gas on Arbitrum to borrow the money. Now, take this into comparative like value against how much you would have to pay to go to a private credit fund to get a similar loan. The credit fund itself is probably having to spend hundreds of thousands, if not millions of dollars to perform a investment analysis or credit analysis on your company. They have to look through all of your financials. They have to look through the founders. They have massive compliance they have to go through. It's very expensive. And this is what sets the floor on the loan size in the industry right now at like 25 or $50 million, right? For us, like we can issue loans to a single GPU, right? I think our smallest loan size has been like $500,000. So there's like an order of magnitude difference when it comes to fees. And then if you have the chips and they're already installed, like we can issue the NFTs in a week, right? So there's a massive speed difference here too. And so like our offering when it comes to what others are providing, I personally think it's a more competitive offer. And this is probably the first time that I've been able to say this looking at any other type of product in DeFi. When it comes to lending, so we've taken all the architecture, we've taken all the infrastructure rails, and we've packaged it up in a way where now we can like actually say we have a better product offering. We can outcompete the banks. We can outcompete private credit now, and that's what makes it such a like rejection of the nihilistic viewpoint now. Is that like we're actually doing something, right? We actually have a real product that can move outside of our little industry and take on the behemoths, these like multi-billion dollar giants, and actually provide lending, hopefully one day to like the Metas and the Googles and the Amazons and the Blue, and the like CoreWeaves of the world, right? Mm-hmm. Like the largest listed companies in the hottest sector of AI, right? Like it's eye-opening, and it gives me a lot of hope for our industry long term.
And just the last mile piece here, right, is like what in the case where a borrower defaults and like you need to liquidate their collateral. I mean, that seems like a challenge, no?
Well, what happens in Aave?
Will they sell your collateral into the open market? But
exactly.
So you're going to the server farm, taking the specific GPU, and then putting it on.
No, we just sell the title. Somebody else buys the title. They become the new owners.
And then, but like, so if I buy a title from USD.ai in a liquidation, and like I physically want that, then I take this NFT and try to find the server in the real world and hope that they're going to honor that NFT.
No, I mean, so the legal gymnastics that make this whole thing work is that we turned a data center into a warehouse. And with the definition of a warehouse in commercial law, you're able to do this thing called bailment, which is issue essentially a document of title against whatever asset is in custody. So like typically you would use this for commodities trading. So for grains or oil or gold, like you can buy all these things and own the title for it and it sits in a warehouse somewhere, but you don't actually have to go and like pick it up. You can just like hold the title for a while and like sell it to somebody else. And it's the same thing that's happening here, where the GPUs never leave the data center. They stay plugged in and running the whole time. It's just that the owner of the title changes. Just like with crypto lending, like if you have BTC in Aave and you get liquidated, like it goes up for auction and somebody just buys it on the open market, they become the new owners.
Right. But they actually take custody.
Correct, right. Because typically they're like arbitraging away the.
And so is the idea here that if you own the NFT, which is title, like you can then decide what data is flowing through like specific GPUs?
Well,
like what's the benefit of owning this GPU via NFT?
They make money. They're like magic boxes that make money.
So they're selling their like services to Google, and it kind of doesn't matter who the owner is, and like Google might want to be the owner because then they'd just be paying themselves.
Yeah, the way that the industry works is that there's two types of contracts, or two types of ways that you can make money. There's like burst rentals where it's like an Airbnb. It's just Airbnb in owning a GPU. I promise you that's how it works. Same thing. You buy the GPU, right? You rent it out for some money. The value of the GPU depreciates like a house, right? And you use us to take out a mortgage like you would with a house. It's literally no different, right? And people come and rent your GPUs. Sometimes you make more money on short-term rentals, but you really want to get a long-term contract with these GPUs so that you can say like, okay, I've got the next 3 years locked in. I know exactly how much money I'm going to make. Yeah, it's entirely similar. Like, there's no difference between buying a house and renting it out versus like buying a GPU and renting it out.
And so I guess like what you're saying is the way all of these AI companies works is no one actually owns GPUs. They're all owned by third-party people, and they just buy the capacity as they need them.
Like the way that they structure, like it depends, right? So there are when you get into the bigger companies, say like a CoreWeave or other Nebius or Iran, right? What you're buying is you're buying their equity, and you own the chips through the equity purchase, right? And they may have some like bond deals as well too, but that's primarily how they have. You can have ownership representation through there. In the smaller deployments, you might just have a data center which allows outside investors to a variety of outside investors to like buy chips and install them there. And then those chips would be owned by those investors. So that's yeah. So we're working with both. We have listed companies that we're working with. We have smaller individual investors that we work with. But at the end of the day, it's all asset-backed lending, and it's essentially like just taking out a mortgage for your house, or you're taking a car loan.
Yeah. No, makes sense. And then again, like if I buy this NFT, right? Like look at me. I'm not in a data center. I don't right? But like I can maybe go to USD.ai and a liquidation sale, buy the NFT that represents the GPU, and then like what can I like stake that to earn the revenue that GPU is earning?
So typically the larger borrowers are going to have locked in contracts. And like the people that are going to buy $25 to $50 million worth of GPUs are a very specific type of buyer, right? And especially if you get into bigger, like if we do a $500 million loan against some AI equipment, there's probably one or two people that can actually buy that if it needed to be liquidated. At the smaller size, there's a bunch of people. Like you have $5 million worth of GPUs that I can get today, and they're already installed, and I can have them run immediately. Done. Sign me up. There's a 3-month backlog at NVIDIA to get new chips, and I can get those today. Like somebody will buy that. As you get bigger, there's a bit more risk, but at the same time, like that risk is offset by almost always at the larger size. Like anything above $30 million is going to have a long-term contract. So it'll have an offtake agreement with OpenAI or Oracle or any of the other buyers of compute that locks them in. So And again, like there's so much demand for this compute right now that uh, somebody's going to buy the chips.
Yeah, no, I mean, what I'm like understanding is that this whole thing is built on like the peculiarities of like how the AI chip industry is working right now, and like we can have another hour-long conversation of how that works, and that'd be interesting and that's great. But like that's kind of not really what's interesting from a crypto perspective. What you're doing, which is what's interesting, is like no judgment on how another industry works. That's how it works. What you're coming in is you're coming in and saying we're going to provide you the tools that crypto has built, the primitives that crypto has built, to enable the way your industry works better. Like we're not going to come in here and try and change it. We just want to enable you with better tools that before, sure, were offered, but like you need to have like real size and relationships and like time and all this crap, right, to access.
I think it's a bit more nuanced. I think it's that if you're competing with, there's no way that crypto can compete with the banks, because banks are, subsidized by the government and they socialize losses, right? What's so interesting about the AI industry, and specifically like the GPU infrastructure industry, is that the banks are not involved. That they just, according to the rules, they're not able to touch anything having to do with like providing mortgages to GPUs. I wrote a long article about this, about how Basel regulations and laws, which is what governs the banks, prevent the banks from providing lending. And so, banks essentially are a subsidized way of issuing debt and socializing risk across all of society, right? And this is why like people get so angry at the banks when anything bad happens. But that's their job at the end of the day, is that like they're a way for governments to kind of push and prod the economy how they want, and then socialize those risks in case anything goes wrong. And so with the GPU industry right now, like all of the investment is through private credit funds and private investors and tech companies like Meta and Amazon. And so a lot of people who might feel that the industry is running hot, there's billions of dollars being invested, maybe there's a bubble. What I would say is that the government's not involved in any of this. If there was a collapse tomorrow, the people that would be most directly affected are private credit funds. Maybe Meta would lose a good deal of its free cash flow for a long time. But those tech companies, those tech companies just like amassed like billions and billions and millions of dollars of cash over the past years and had nowhere to put it. And finally they do. So they're still in a really healthy position. If you look at the Amazon, Meta's, Google's, right? They have these businesses outside of the infrastructure that they're building that generate a lot of money. And so there's not a ton of risk that comes there. The risk, if anything, is like downstream in credit, like private credit. And if there was a private credit blow up, the government's not going to step in. And investors would lose money, but those are private investors. It's not the public who's socializing the losses. And so the reason that we're able to compete is because there's no banks involved. We can go toe to toe with every other private credit fund out there on equal terms. And the government is not subsidizing this industry like they do with any other type of industry. And so we're able to come in and provide competitive rates, lower cost of capital, faster loans, using the rails that we have. And that's what gives us the edge, is that when in a pure free market, like we're seeing with this GPUs right now, like we have the better lending product. Just, it's plain and simple. And that's what gives me, and so like, but it's such a special case, right? It's like, to do this, you have to find like a really tiny niche. Well, not ours. I mean, it's a big niche, but like you have to find this like one lending niche, because like lending sucks. Like the lending business is a terrible business, right? And we've seen this with DeFi over the past couple of years. Like, let's talk about all the failed lenders. Like, wasn't it Maple? Maple blew up in 2022, right?
Yeah, I mean, essentially because they were giving out bad loans to things
adverse
in the real world.
Selection. Yeah. But there was what was the company that was giving like loans to bike companies in Africa?
I think it was Maple.
No, it wasn't Maple. It was a different one. But like like the type of loans that people were sourcing were like the worst. Like people came to crypto, and this is an ongoing problem that we have, especially for DeFi. Is like people come to us when they can't get loans anywhere else. And that's a terrible place to be in, because like you don't want to lend to those people. You want to lend to people that are going to pay money back, and you want to lend to people who have as much of that money guaranteed either by the government or some other institution, right? Because blowups do happen, and when the blowup does happen, like you as the lender are going to be affected immediately, and it could destroy your entire business. So the fact that like an entity like Aave or Morpho or like Euler have been able to like lend at scale for so many years now and not have any like majorly systemic issues is really incredible.
Yeah, but like, man, like it's because that everything's on chain and within their control, right? Like it's easy to build that kind of product where you're essentially like it would be a lot easier to build like this USD.ai years ago if you were like, okay, every GPU that is in our system has to be custodied in a warehouse that we own. Like that's a whole different world.
Okay, but the question, I keep bringing this up, is like our cost of capital is lower, and you have to answer the question like why, right? Like how can we offer cheaper, like assuming people want the same returns, whether they give money to a private lending company or whether they give money to to us, right? And so the way that we deliver those returns is through the incentive structure, the two token model that we have at USD.ai. So by splitting the token into two parts, where you have a staked version where not all of the USD.ai is ever going to be staked. We think that at maturity, at scale, it's probably going to be somewhere maybe between hopefully 20%, somewhere down towards like 10, maybe even 5 if we have hundreds of billions of dollars. But even that little slice, like 5% of people who choose to be in the non-yielding stablecoin at any one time, that means that yield that they're kind of deferring goes to the stakers. And so the return of the stakers can increase, and we can offer cheaper loans.
One of the reasons you're offering cheaper loans, though, is because you're just not doing the due diligence, right?
No, that's not true. No. Like no. Like
Didn't you?
Our number one goal is to return all the money back to the people that give us money that put money into the lending protocol. Like we've and like look, I see this with Connor and David, is that like they've gone through and watched all of the blowups from every single stablecoin that has occurred over the past 5 years, and they've seen what works and doesn't work, and that's why like from the ground up when they were building this, they were able to take everything that they were doing with the NFT lending previously and then merge it into what the stablecoin can offer now. And I think it's a really like necessary problem to ask, is that like how are you not going to blow up like every other non-treasury backed stable coin that's ever existed? That's got to be the number one question you have to ask.
The question I was really asking was like, you said earlier that one of the reasons you're able to deliver a better product to GPU owners is because private lending companies need to spend like hundreds of thousands, if not millions of dollars on expensive due diligence, right? And like, honestly, not much of that is regulation based, because like that's kind of the point of private credit, is they're unregulated, so they do like whatever they want. And like, they're not just doing that like out of like boring routine, right? Like they're doing it because like that's important to lending. And I'm not saying like what you're doing is wrong is any way. It's just a choice that like part of how you're delivering better cost of capital is one by the two token model, which diverts some of the yield into like blah, blah, everything that you just said. And the other part is that you're reducing costs by by doing due diligence in a way that is inherently lighter than how private credit does it.
Well, the only thing we don't, okay, so if you go to a private credit firm, they're lending against the business, right? They're lending against the equity and the assets that you have in the business. And that's what makes it so expensive. We don't lend against businesses. We lend against the value of the hardware itself. So like our biggest question that we have to solve when it comes to underwriting is like, are we valuing these chips correctly? And two, are the people that are borrowing, do we think that they're going to pay, like have enough income to pay the loan back? Because like these chips lose 60 to 70% of their value in 3 years. So if we make a wrong decision and all of a sudden like they're not making enough money anymore and they can't pay down their loans, like there's real risk there, especially in the first year, right? And so like our like number one priority at the end of the day is like what's the value of the machines? And so, we're working with a lot of people in the industry to figure this out. We talk to secondary market suppliers. We get like daily or weekly updates on how much these chips are selling for in secondary markets. And then more importantly, and this is kind of the hard part, is like, how do you model the rental rates over long periods of time, right? Can you like provide, conservative forward projections on how much money these people are going to make 2 to 3 years out in the future? And that's the really hard part, right? Because like you have to get into the weeds of what their business is, who they have offtake contracts with. But that's a very different question of then like, let me do due diligence on you, the founder, like everyone in this company, because like the company could go bankrupt and then what? The private credit firm has to like sue them, try to get assets back. We don't do that. The reason our system works is like, if there's a liquidation event, like 30 days and you didn't pay, okay, now you're like at threat of liquidation. After 60 days, like boom, you're done. It automatically liquidated. Somebody's going to come in. It's programmatically sold. We have this auction system and the assets just move on to somebody else. We hopefully get all the money back to ensure that the lenders stay whole. And, like everything just works smoothly. But again, like I say this, we haven't had any liquidations yet. So
no, man, I hear you. And, we've been going on for like an hour and a half. I don't know if my audience has the Joe Rogan attention span. So I want to just kind of wrap us up here. But there's been something that's burning in my head since you said it that I just want to address, which is that we in crypto will never be able to compete with the banks. And like, I am so 1 billion% on board with you. But I also want to say that, like, why would we ever compete with the banks? Like, in my opinion of what crypto is and why I'm so stoked on what you guys are doing in USD.ai is that crypto is not a business, right? Like, the internet is not a business. Like, open source, public goods, credibly neutral things, these are not businesses. They're tools in which you build businesses on top of. And like, I don't ever want to say like, we're going to compete with the banks. What I want to say is that the banks are going to build tools that make lives for their customers better by building on top of both the primitives and the settlement rails that we're building in crypto, right? And maybe using some of the products or whatever, right? But like, I think that, again, like, I've been like looking for an opportunity to, well, no, this whole show so far has been looking for opportunities to say like, we got to stop building tokens as the product with some fancy thing behind it, right? Like, let's start building tools that empower people to do things in the real world. And like, I want to say like, my hope to get out of this nihilism and like how I could see us recovering from all of this meme coin goodwill destruction is like, in the same way the internet originally, everyone was like, this is just for porn and like whatever. And then it like, now it's not even questioned that this just makes our lives probably better. Might be making it worse. I'm not sure, but like no one questions it. It's just like how we function. Like that's, I think the path for Ethereum, at least, if it's successful.
yeah, like just to get into like the hippy dippy parts of what's being built, right? Like the reason that we can exist in the first place is that we can at USDA are able to craft a narrative around why we think value should flow into the vaults that we have, right? We can tell people that, look, we're going to facilitate this lending. We need you to deposit $1 billion worth of stablecoins tomorrow. And if done right, that type of like broad consensus building is really what this whole platform's for. And coming back to the prediction markets, which we were talking about earlier, this is the point of prediction markets when they're not used for sports betting, is that they allow people to find consensus on a certain topic or idea. And I think a lot of people tried to use this for like non-financial topics. So, like Constitution DAO, or like even that one's financial, but like how can we find distributed consensus on certain topics or ideas? It becomes much easier to do on a crypto network because anyone can participate, and you're able to quickly find what works and what doesn't work, or like where public sentiment is or is not. And that's really the most valuable thing, right? At the end of the day, it's like all the things that you and I talked about two-token model. These are just games, right? They're just fun games that allow us to, in theory, direct that value that we're gathering into different ways, right? To direct people to different ways. And so it's almost like there has to be a narrative. You kind of explain the narrative openly. People direct capital your way or some type of value. And then there's outcomes that happen from that. I think like that's the most important part. And that's like why even 8 years on now, or soon to be 9 years, I still think this industry is worth staying in and building for.
No, man, I hear you. And I think, maybe the biggest problem we're having is that, like, it's been 9 years. Like, I'm 30s, 40s. Like, maybe we're just too old for this industry.
No, I don't think so. A couple of things that I think happened was that when you have a technology like Ethereum, right? Or Bitcoin or anything else, right? What we're trying to do in finding this consensus or aligning values at the beginning requires like deep technical expertise for the system itself, for ETH itself. But as the kind of technical foundation is set up and established, that technical expertise stops becoming so valuable. And now you need people with actual financial experience. Like Connor and David are co-founders. Like they both worked at banks. They both did David was doing lending for high net worth individuals against like timeshares and art and like really garbage collateral, right? So he had already been working in finance, seeing the nuts and bolts of how all this happened, and then was able to bring this and then slap it onto crypto rails, which is kind of the beauty of what we need to do going forward. Is like we need experts who understand how to compete with these different systems to like come in and then use all the technical foundation that we've built over the past 5 years, 10 years, to then give them an edge somehow.
Yeah, I totally agree. And I think that's, for me, that's the underlying like current of this nihilism, is that what I'm saying is not going to attract those people. And like, I think that is, frankly, you could say that about basically anything on this planet in 2025. Like, I don't know, man, it just seemed like a hard year. And maybe if you're in AI, it felt different, but otherwise it's just like, there was a real sense of like, man, like, I don't know if things will ever get better, but if they do, it's going to be in a while. And so I think like society need to let that out. Like I have hope for 2026 and like hope that just things will get better and that like we can be a part of that. But
I think things have never been better than where we are now. Like it's the easiest it's ever been to come in and build anything in crypto, and now it's legal too.
Yeah, man, it's legal, sure. No, man, like I don't know what to say. Like I'm more embarrassed than ever to tell people I work in crypto. Yeah,
no,
for sure.
But it's the wrong but it's the wrong stance to take. I feel
I'm here. Like I'm putting my face on the internet. Like I'm associated with it. Like I know. I'm just saying that like, if you don't have that sense of like it's embarrassing to say I work in crypto right now, like maybe I need to come hang out with your friends. But like, you know, in Los Angeles where there's not that much crypto stuff, and I hang out with like my wife who's a surgical resident and all of her doctor friends, like it's embarrassing. It is. And like you have to understand that, right? Like you
I
have
understand
to
it. I understand. I think it's just like the type of people who do crypto in LA versus the type of people who do crypto in New York.
sure, but you know, whatever. We don't need to go on.
No. Look. Like again, like I think that at the end of the day, like both you and me are people who are driven towards working towards like positive moral outcomes that benefit society at large. And I think the difficult part in this industry is clearly defining like what those positive outcomes are. And you know, once all the games have been played and the incentive structures have been, you know, run and figured out, like where do you make an impact? And I think that's difficult, right? It's either you stop at Bitcoin and say like, hey, this is Bitcoin's enough, right? And the maxis are right. You don't need to own anything else. Or there's something else that can be found that's positive that isn't just building yet another casino for people to gamble with.
For sure, man. And you're talking about your and my journey right now, right?
Yeah.
What I'm more lamenting is that like when we're looking for people like Connor and your other co-founder to come in, like if you're outside the industry looking in right now, like how can you not think it's just about gambling and scams and like there's a whole side of the industry that you and I don't talk about, which is like actual like really scary scams where people are like old ladies like buying like thousands of dollars of Bitcoin to send to like.
Oh, don't get me wrong. A good friend of mine was scammed out of like 400K just this past like a month ago.
Yeah, there's so many stories like that. There's so many stories, and so like I hope we can get back internally to our energy of 2021, which is like we know there's a lot of crap, but there's a lot of things to be excited about. I hope we can project that outwards and like get the people that like I'm losing, you know, steam here, right? Like that's kind of what I'd say is like the hardest part for me about the general sense of nihilism is like this is the image we're putting out there, and like because of that, I think we're trending harder in this direction. We're not digging out of it because the only people we're attracting are the scammers.
I think it's just it's easy to get to 7 or 8 figures scamming. There's very few people who can get to 8 or 9 or 10 like SPF. But to really build value for the long term and keep it, like it requires like a dedication and a good moral compass. And
we need to figure out how to get those people interested in joining us.
And also you have to move to New York because like like what we're doing is finance in this little bubble of DeFi, right? Like the Ethereum builders are often Switzerland or wherever they hang out, like, you know, designing their again, like you can choose to go off and build ETH on your hippie retreats, or you can put on a suit and come to New York and build for DeFi.
Yeah, and what I'm just saying is those two groups are a minority in our industry right now.
Yes.
Like that, in terms of the external perception of our industry, like I don't think that's debatable.
Yeah, or you can join the LA crypto cabal.
Yeah. I mean, maybe I just need to vape more and get a broccoli haircut. All right, man. This has been awesome. Before I let you go, like people want to learn more about USD.ai, want to hear more from you. Just can you plug like where are the best places to learn more and follow?
Yeah, the best place would be come to our Telegram, USD.ai, or come join it. Like come message me on X, and then join the Telegram. I mean, we're always there. Like we're super open. I'm happy to do one-on-ones with anybody if you have any questions or anything. You know, we have some great content on the website that we're creating. I think that, again, I think it's really special. And I think that, you know, we have nothing to hide, right? So it's you know, we want to make the world a better place, and we want to capture a bit of the boom that's happening right now and then deliver back to crypto people, because everyone's like yield starved at the moment. And we've max extracted and passed yield back and forth from each other for too many years now. It's time to take it from TradFi.